Good morning, Tax Tip Tuesday 47 out of 52. This week I am talking to you about tips and trunks. If I can get through this without giggling at trunk or trunk master, then I'm doing well. So the age-old question of whether or not to leave a tip. Have you ever wondered whether your server gets the tip or whether the employer takes them? Have you ever wondered what are the different tax and NIC consequences of the varying methods of rewarding the service? Maybe not, but as accountants we have to. So not long ago this question got brought up within one of the groups of accountants that I'm in, and it took a few hours between us for us to solve every eventuality. For one, it doesn't come up often, and for two, there are quite a few variables when it comes to the tax implications. So first things first, all earnings are taxable income, no matter how they are received. There is a tick box on the self-assessment tax return. I'm yet to see an entry in it, but there is one there. The different methods of reporting, taxing and charging NIC depend on how the employee receives the money. Service charges that are mandatory are always subject to pay-as-you-earn, VAT and national insurance. Cash tips that are handed directly to the employee where the employer has absolutely no involvement and not subject to pay-as-you-earn or Class 1 NIC, the employee should advise HMRC of the amounts they have received each year. If the employer collects the tips either by cash or card payment and distributes them to the employees, then pay-as-you-earn and Class 1 NIC applies. If the tips are collected by an individual who is not the employer, who then distributes the money, this is known as a trunk. If there's an organised arrangement to collect and distribute tips by a person who is not the employer, then a trunk exists, and the person who distributes the money is considered a trunk master. So, where a person accepts and understands the role of the trunk master, which includes the operation of pay-as-you-earn, there is a trunk for tax purposes, and the trunk master may have to operate pay-as-you-earn. The employer should advise HMRC that a trunk exists and of the name of the trunk master so that they can then set up a pay-as-you-earn scheme in their name. The trunk master is then responsible for deducting income tax and recording any national insurance that is due. The trunk master is not responsible for deducting national insurance. The responsibility of deducting Class 1 NIC remains with the employer even if they delegate the task of distributing tips, but they remain the authority on the allocation of monies to the employees, so if the employer is choosing the allocations. If national insurance are due on trunk payments, the employer is required to deduct and account for them through their pay-as-you-earn scheme. But if the employer does not have any say in how the monies are distributed, then no national insurance contributions are due. Businesses can have more than one trunk, for example, for different departments. Failure to deduct pay-as-you-earn by the trunk master may result in the employer being directed to operate pay-as-you-earn on the monies passed to the trunk. If the employer or trunk master fail to operate pay-as-you-earn, the employees are entitled to a pay-as-you-earn credit if the tips are included in their self-assessment. This is so the tax is not collected from the employees. Despite the amusing terminology, this can be a confusing area to navigate, so as always, I would advise you to seek advice if you are unsure of the correct treatment. Have a lovely day, everyone.